Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here again to understand what's happening with several currency pairs and due to what are the factors due to which we have been seeing such impact both from the global as well as from the domestic perspective. First, as we always talk about the domestic side, that is India, and if we talk about flows, because flows are something which affects the currency pair the highest. So if we talk about equity flows for the month of October, we have seen outflows to the tune of around 72,000 crores. And from debt, we have seen outflows of around 4,000 crores. So if we see for the entire year, there were only 3 months where we have seen outflows, that is Jan, April, and May. And after that, we are seeing these outflows combined put together also that those 3 months outflows were not as huge as this is for the month of October. Also, such outflows was last seen in March 2020. That was obviously during the COVID time. So these outflows definitely affecting us. Secondly, if we talk also about the FX reserves, we are now at around $690 billion, almost from the highs of $704 billion we have moved lower. That's mainly because the FCA, that is the foreign currency assets, have been revalued and euro and the currency pairs have gone lower. So thus the FCA itself has dropped about by around $10.5 billion. So that is the reason we have seen a drop in the FX reserve to $690 billion. Also, some kind of intervention has been seen at certain levels, but then the major reason for this drop is attributed mainly to the FCAs only. Now let's understand on the global side because that's quite interesting. If we see the Fed now, they are acting a bit hawkish. If we talk about the Fed officials, there's no much aggressiveness in terms of their tone for the rate cut cycle. So around 46 basis of rate cut as per the Fed fund futures has been discounted for the next 2 months, that is till December end of this year. And on the contrary, if we talk about the ECB, that is European Central Bank, they are sounding a bit dovish. So even the ECB chief have been sounding a bit dovish, understanding that the inflation is under tad now, and there can be a possibility of 25 to 50 basis point cut for till December also. So that is why we are seeing the euro dollar pair moving left towards or below 1.08 levels also. If we talk on the contrary with the Bank of England, one rate cut is expected from them as well in the coming policy. We also saw the Bank of Canada. They're having a policy where again they are expecting the rate cut. Again, there are two cues where some are eyeing an aggressive rate cut from the Bank of England as well. If we talk about the Brent crude prices, they have been seen consolidating between $73 to $78 per barrel. For dollar rupee particularly, if we talk about, then the dollar rupee pair is finding some support at 84.03 while some kind of resistance at 84.09. So if we talk about the couple of sessions trading band has been only maximum of 6 paisa, not beyond that. But what we perceive from here on is considering the outflows, yes, there can be a possibility of a test of 84.15, which were the NDF traded highs, while a break of 84.03 on a closing basis can get the pair towards 83.90. So overall band remains still, if we talk about the positional view, then 83.90 to 84.20 odd remains a crucial band for the entire month of October in the next 7 trading sessions. Well, so that's all from my side, friends. Wishing you all a very happy and wonderful week ahead. Thank you so much. Thanks.